Yep. Well, and to Said's point, and the segue game was on point. Shocking stat of the day from the Kobisi letter. I've been quoting them a lot as of late. They've had some good data that's come out. Home prices in the United States are up 47.1% since 2020. 47.1% since 2020. The median home is now selling for $420,800, which means that the median home is now selling for $135,000 more than it was in 2020. All as the median mortgage rate has roughly tripled from 2.7% to about 8%. Yikes. On top of that, home price growth so far this decade is on the verge of surpassing all growth seen in the 2000s.
Bro, you got to read that again. That's a wild thing. That's a wild stat.
Home price growth so far this decade.
This decade. How many years has this decade's gone by so far? 4.
Yeah.
Okay.
This decade is on the verge of surpassing all growth seen in the 2000s.
What?
Yeah.
Come on, Fed.
That's a problem. During that time period, housing prices soared 47.3%, including 80% spikes never before the 2008 market crash. So, yeah, that's fuck.
Buying a home is officially a luxury.
Well, and here's the problem: is if you look at the chart, pull up the Fred chart if you don't mind. This is from the Kobisi letter, but they stole it from the Federal Reserve. This is a 45-degree incline. That's really not healthy or sustainable. But if you look at the tail end of this here, and if you're driving, obviously just close your eyes and imagine while you're driving, get your autopilot going. This is a damn near vertical incline at the end in the 2000s.
Well, I mean, you look at it, right? I mean, okay, 45-degree angle, you think, okay, that's one thing. But you got to also compare this to what happened with wages during this time.
Mm-hmm.
That wages figure is going to be a little bit more flatlined. Because a lot more, right? So I remember, I think the home price to income ratio used to be only like 3 times the amount of someone's income. Now it's over 6.
Yeah.
I mean, wages aren't keeping up. So one of 2 things are going to have to happen. Like Chris alluded to at the top of the show. Maybe this is going to take a 20-year correction if there's no housing market crash.
I sincerely hope not. I really hope that's not the case. A 20-year correction would be very, very, very painful for wealth building.
And devastating, right? Devastating for the middle class. Or you got an outdated 30-year product that might get updated to a 40-year product, meaning traditionally you get a home loan, and the term of those loans is you pay it back over 30 years, right? That's how you're able to manage your payments and get the payments down enough to where you can afford a home. Mm-hmm. But maybe they push that out to 40 years. But now, why is that such a dangerous thing, Chris? I know one of the things is we already know that's going to ultimately increase home prices, right? But 40 years for someone to repay a home, I know you can't discriminate based on age, but you're like, bro, people are going to die before they pay off this loan.
Yeah, well, and the sad reality is I think no one's going to care by the time you get to that point. They're going to be so thirsty to buy a home and so desperate to start building wealth that's what they're going to do.
Yeah.
And it's going to start with the GSEs, Freddie and Fannie, saying that they're going to be buying and selling on the secondary market 40-year mortgages, and then everybody and their mother will originate them.
Yeah, exactly, because they basically set the standard.
Yeah, they set the standard. Let's run through the next couple quotes. The next quote here is the last one I have. We've gone a little long in the tooth with quotes, but we wanted to give you some valuable information, obviously, given what's going on this week. And by the time you hear this, I think this look back will help you, I guess, digest what the Fed has done since that time. Nick Gurley, he's the CEO of Reventures. Interpretation of Realtor.com data is interesting. Price cuts on the U.S. housing market just surged up to the highest level in 5 years, with 22.1% of listings in May of 2024 receiving a price reduction. That's nearly 3 times higher than the pandemic low and rising fast, signaling a weakening housing market where prices are likely to drop in H2 2024.
That's interesting because it was just a month ago, I remember that 33% of the homes being bought were being bought above list, which was on the higher end of the normal range So we're seeing a sharp shift now in the opposite direction.
Yeah, and I think it's a good thing. Frankly, I know that a lot of people who are the housing real estate professionals out there will say this is bad for business. Yes, it is temporarily bad for business, but you got to look past near term and look long term at what this means. If your clients can buy homes cheaper, they can build wealth. They can continue to buy bigger homes later on. They can scale and grow their financial wherewithal. So your clients will become wealthier over time. They'll be able to build wealth. They'll be able to buy bigger homes from you, more homes from you, second homes, vacation homes. This is a good thing for the economy. And I know a lot of people don't want to see it because they don't want to see their housing prices go down. Those housing prices going down, if you own a home, only matter to you if you're planning on selling. And if you're planning on selling right now, where the hell are you going to buy?
I know. Where are you? Exactly. So wait, you just mentioned something that got me thinking. Would you ever buy yourself a vacation home?
I have contemplated on a number of occasions, yeah.
Really?
Yeah.
Okay. What were you thinking? I know back there was a time where you were thinking about Big Bear, right?
Yeah, my wife and I really enjoy Big Bear. She really likes it. I don't know. I go back and forth on it because for me, it's not an income generating thing. I'm not a big fan of Airbnb. Not to say that I have a knock on it, but if I have a second home, like a vacation home, I want it to be mine.
You wouldn't want to rent it out all year long and then you go to it during the summer.
Yeah, exactly. So I think for me and my wife, I don't know what our next home purchase is going to look like. A lot of what I thought I wanted has changed a lot in the last couple of years. And look, we do this show once a week. We talk about the data pretty frequently. I'm in the banking space. I'm not really comfortable with where the economy's heading.
Well, what has changed? You said a lot has changed over the years. So like where are you going from? Like what did you like before and no longer like?
I wanted a bigger home, and I wanted like a vacation home, and I wanted a place to store my cars. And, I was thinking about all the material possessions and everything else like that. And now I'm so concerned about where the economy is heading. I would rather have the security of having the affordable, conservative lifestyle that I have now
Yeah.
than I would having the luxury of those things. Like I see people right now who are buying a lot of really high end things. They're making good money. They're on top of the world. That's all well and good. Good for you. I'm happy for you that you can get those things. I personally am scared of where the market's going and what that means. You don't have to be scared. I'm not trying to scare you. I'm just saying for right now, I don't want to buy a Rolex. I don't want to buy a high-end car. I don't want to spend egregious amounts of money. I want to maintain our quality of life and keep our expenses where they're at.
Yeah.
And I want to do that for as long as it takes for me to feel more comfortable. And right now, yield curve inversions, all this uncertainty in the data, the Fed acting in ways that we're essentially gambling on. It just seems there's too many variables that are inconsistent and unknown for me to feel comfortable spending the money to do those things. So it's just essentially wiped from my mind right now.
Yeah, because you gotta think long term, right? If you're looking to buy a home or a vacation home, you're getting a longer term loan on it. You don't know what's gonna happen.
I'd rather have that money just in case that I don't have to spend somewhere else. And I am uber conservative compared to a lot of my peers, and maybe that means I'll be less wealthy over time. But as far as I'm concerned, right now is the time you get smart, you pay off your debt, you be thoughtful, you be pragmatic. And trust me, I will be the first person to come on the show and be like, fucking buy, man. Now's the time. Deals are out there. Let's go. Cash money. But now it's